Very good day and welcome to today's analysis of the US stock market. We're looking through some of these major indices and probably the ETF and some of its indexes and also some of the stocks. So last week we had a really nice rise. You can see in this weekly chart that the SPY made a very nice green candle, almost closing near the top of the price range. And then previously we have a very big green candle here, a small red candle, and then a continuation up. If you look at the SPY, the stochastics actually went from overbought to oversold smoothly down, and when it reached the oversold level, the SPY bounced back up. So whenever the SPY reaches an oversold level, for example here it bounced back up, here also it reached an oversold level, it bounced back up. And when in late 2006 as well, when the SPY reached the oversold level, in the stochastics it bounced back up, and here as well. So if you take from history, we are actually quite oversold from a weekly perspective when a few weeks ago, which is why the market bounced up quite furiously. And usually when the stochastic moves from overbought to oversold in a smooth manner, the bounce up can be quite smooth as well. Now, going back to the daily chart here, and in this daily chart we can see that SPY has actually broken out of a downtrend line. This is the downtrend line, and whenever you see an index or a stock breaks above a downtrend line, it tells you that the trend wants to change. When it was below this downtrend line, the trend was down, and then it broke above this downtrend line, and many a times it can tell you that the trend wants to change from bearish trend to bullish trend. And then the other thing we can see is that SPY has moved back above the 20 MA. Previously, when it gapped down all the way from late February or March to early April, it was below the 20 MA. This red line here is at 20 MA, which means short term it was bearish. But after that, it gapped up above the 20 MA, and this is another point that tells us that the market is trying to change trend. It has not gone above the 50 MA, which represents the mid-term, and it has not gone above the 200 MA, this yellow line here, which represents the long term. So we are somewhere in between short term bullish, but mid-term and long term wise, we are still not out of the woods yet, so to say. Now what happened here was the market bounced back up, and then it went down again, and then it shot back up. There is a possibility that we might have a measured move target here. If we create a parallel line, we can take a measured move target, which quite generously reaches to about the 200-day moving average. So it's a possible target here, but maybe as it reaches the 50 MA, there might be some resistance, and definitely when we reach the 200 MA, there's going to be resistance. Last Thursday, we have a doji here, which tells about indecision in the market participants. That's quite okay, not much of a problem. The important thing is it has gone above this downtrend line, which tells us some positive change, bullish occurrence, and it's gone above the 20 MA, which is quite encouraging. I don't know whether you can see this or not. Actually, we can draw a cup and handle type of pattern here. This is a variation of the cup and handle where it goes down and then it forms kind of a sideways trading for a while, which, as you can see, SPY has already broken above this handle area. And when an index breaks above the handle, it tells us of positive development, and as long as it stays above this the top of this handle here, my belief is that SPY will continue to drift upwards. Maybe not a smooth upwards all the way back up, because you have the 50 MA to deal with and also the 200-day moving average resistance to deal with. But as long as it stays above here at the top of this handle area, most likely SPY will continue to drift and then slowly move its way up. That's for SPY. Now let's take a look at the QQQ, which represents the tax as well. So from a weekly perspective, it was quite oversold. You can see that the stochastics reached 20 area, which is why there was a massive bounce up. And then from a daily chart perspective, stock has actually broken back above a downtrend line. So if you remember what I said just now, when indexes break above the downtrend line, it usually signals that it wants to change trend from bearish to bullish. And the QQQ has broken above the 20 MA, and it is trying to go above the 200-day moving average as well. And we can see that it has made a variation of the cup and handle. This is the handle area. This is the previous pivot high. And as long as the QQQ stays above this high here, this area, my belief is that it will drift higher. You can actually draw an uptrend line connecting this low here and this low here. And what this does is it gives us an indication of whether QQQ might correct more or go down. So if it trades sideways and doesn't go down below this uptrend line, there's a possibility that it will just continue to drift sideways and slowly move up. But if it drops below this uptrend line, we might have a correction. So there's something for us to keep in mind. Go back to the SPY. So we can, same thing with the QQQ, we can draw the uptrend line here. And as long as SPY stays above this uptrend line and above this handle area here, top of this area, doesn't matter what happened if it trades sideways like that, as long as it doesn't drop below this area, the uptrend line and this horizontal highs here, most likely SPY will continue to move back upwards, drift upwards. And let's take a look at the Dow Jones Industrial Average ETF. It pretty much tells the same story as the SPY and the QQQ. Move back down and then up, and then move up. You can see a possible cup and handle variation here. It has gone back above the 20 MA, but it's still below the 50 MA and 200-day moving average, which might act as a resistance in the future. And as long as it stays above here, Dow will most likely continue to trade sideways and then drift higher. We can also draw a uptrend line here as a gauge of the short-term bullish strength. So as long as the DIA stays above this uptrend line, most likely it will continue to drift sideways and move higher. On the other hand, if it drops below this uptrend line, there's a possibility of weakness and it might go down. But it hasn't dropped below this uptrend line yet, so let's continue to stay mildly positive, mildly bullish. The other thing to note is the daily stochastic is getting quite overbought here, so there might be some correction or some weakness in the days ahead. And if the DIA just ignores the overbought situation, it will just drift sideways and then move back up. Let's take a look at the semiconductors. Semiconductors has also broken a daily downtrend line, which is very positive. Tells us that it wants to change trend. It has gone above the 20 MA. It is also trying to go above the 50 MA and the 200 MA. Now what might happen is there might be a bearish golden cross where the 50 MA crosses below the 200 MA, and that sometimes might mess with the bullishness. And let's see if we can find some examples like here in the past, here where the 50 MA drops below the 200 MA, it causes a bearish reaction. So that is what might happen, but we hope that it will not affect the SMH that much. We hope that it might ignore the signal that this bearish golden cross makes. And there's a cup and handle pattern here, if you can see. This is the cup and handle. So it's pretty much the same story as the SPY, DIA, and QQQ. And if SMH, the semiconductors, can stay above the top of this area, then once again it is likely to drift sideways and then move higher upwards. But on the other hand, if it drops below top here, then that might be weaknesses. Same thing, we can draw an uptrend line here and gauge the short-term strength of the SMH. So as long as the semis stay above this uptrend line, then we consider there's still bullish strength. But if it drops below this uptrend line, do be a bit careful because there might be more correction. Now I want to take a look at some of the leading stocks like Apple. Apple is one of the stocks that are widely watched. Let's go to the weekly chart. Weekly chart, it was quite oversold. You can see the stochastics at the 20 area, oversold. Smooth trade, railroad track down. And when it was quite oversold, it was at a long-term support area. You can see this previous high here where Apple drops to this support area, and it was oversold and it quickly bounced back up. Moving back to the daily chart, it has broken back above the downtrend line, and I think in the chat room I did mention some weeks ago here that Apple formed a bottoming tail, and bottoming tail usually can appear when the stock wants to turn back up. Sometimes the bottoming tail is a turning point, and when the stock goes above the highs of the bottoming tail, it tells us that it wants to go up, and this is what exactly happened in Apple. Gap up above this bottoming tail and then slowly drifted higher. Now the price is around 267.99, trying to go to 270. Anyway, it has broken above a downtrend line, which is something very positive. It has gone back above the 200 MA and also the 20 MA, which is something very positive. And if Apple continues to stay above this downtrend line, right, it will be very positive for the market, because Apple is a very big component of the S&P 500, the Dow, and also the Nasdaq. So you can see if Apple stays above this downtrend line, most likely the market, the tags, the S&P 500 and the Dow will continue to drift higher. Let's take a look at Microsoft. Microsoft, it's much more stronger than the SPY, the Apple, Dow, and the Qs, because it has gone back above all of its three moving average, the 20 MA, the 50 MA, and also the 200 MA. So a stock that sells off and quickly bounces back above all these moving average tells us that it has strength, is much more stronger, and you can see that it has broken above the downtrend line as well, which is a very positive thing, telling us that the stock has changed from bearish trend to bullish trend. And it has also formed this previous high here. It has gone back above, and I think this is going to act as a support area. So as long as Microsoft stays above this 160 area, it is most likely going to drift higher. And surprising many people, it might go back to former highs. So software is playing a big part in the world right now. You can see from stocks like the Zoom application, because people are staying at home quite a lot, and you don't need to meet individually to use software. And when you stay at home, and companies, their employees, they work at home, so softwares are going to be used more and more, which is perhaps why the Microsoft and stocks like Zoom, they perform better than the rest of the other stocks like airlines and cruise lines. From a weekly perspective, this is a weekly chart of Microsoft. You can see there's a very long consolidation back here, which acted as a very strong support. So it would take a tremendous amount of pressure for Microsoft to go below this area, 133 area, which is unable to go below despite the presence of a topping tail. The support is extremely strong in the long term, and the stochastics is quite oversold. Didn't reach 20, but reached around 25. But because of the support here, it found support here, bounced back up. So Microsoft is one of those strong stocks. Facebook, it's a weekly chart, a big sell-off, but the stochastics will reach oversold, and they have a long-legged doji, and because it's oversold, it also bounced back up, goes above the high of this doji, and moved back up. Last week had a tremendous rise, a very large green candle. So because the stochastic is still quite oversold around here, there's room for it to move up, perhaps up to the 200-day moving average. You see we have a bearish golden cross here, but the stock just ignores this bearish golden cross and move up. And that's what I was trying to tell you. I hope that the SPY and the DIA and the QQQ will also ignore the bearish golden cross warning and just ignore it and continue moving higher. Facebook, it broke about this downtrend line quite early, around the 25th, and this is good sign that it wants to change trend. It has made a higher low. It's a low, higher low, higher low, and if it stays above this area this week, there's a possibility that it might drift and continue to move higher. We can draw a uptrend line here. It's a gauge of short-term strength. As long as Facebook stays above this uptrend line, then it is likely to continue to drift and move higher. But do be careful if it drops below this uptrend line. Okay, just a caution. But if you see a lot of stocks and even the main index, a lot of them are very oversold in the weekly chart. So the probability that it might not move down anymore is very, very high. See, there's a lot of bad news coming in, but the stock market is forward-looking, sometimes up to 6 months ahead. So a lot of bad news that comes in might already be factored in. So, but it's also good for us to take a look at the short-term uptrend line to tell us, to warn us if there's any weakness. Usually if the stock doesn't go down below the uptrend line, it's going to continue to drift and then slowly move higher and even surprise many people by going back up to near its former highs. Some stocks might even make new highs. Now let's take a look at Google. Google is a weekly chart. You can see that it sell off from around 1,005 down to 1,000, which is a round number support level. Usually stocks tend to find support in round numbers like 1,500. All these significant levels, they tend to stop dropping when they reach these round numbers around 1,000, and you can see that it's quite oversold. Last time Google sold off from around here, dropped to here, formed a bottoming tail. It was quite oversold and then it bounced back up. And here as well, it have a massive sell-off, but then it reached the oversold level and also the weekly 200 MA and bounced back up. Last week it had a very bullish green bar, closing near the highs of the week. Going back to the daily chart, it has broken back above the downtrend line, moved back about above the 20 MA, and you can draw an uptrend line connecting the lows here. And as long as Google stays above here, this price, this previous high, and above this uptrend line, most likely it will just ignore the bearish cross signal, bearish golden cross signal, and then it will continue to drift higher. You can see that from the weekly chart, it's quite oversold. So there's a possibility that there's quite a lot of room for it to move, maybe up to 50 and even more. Let's take a look at the tech sector as well. The QQQ, I have already shown you that, but the XLK, which is the Spider Select Sector Technology ETF, is the daily chart. It has broken above the downtrend line, 20 MA, trying to move back above 200 MA, and you can see it's formed a variation of the cup and handle. This is the handle area, and as long as it stays above this, the top of the handle around 82 area, is most likely going to drift sideways and move higher. And we can also draw an uptrend line connecting the lows here and the lows here, and as long as XLK stays above this area and this uptrend line, most likely it will just drift higher. But do be a bit careful if it drops below this uptrend line. It might drop a bit more here down to here, So that's just a caution. Someone in the group asked me about Garmin. You can see many of the stocks and the index, they make the same kind of pattern, whether some go a bit higher, they close stronger, or some close a bit lower, but generally their pattern is almost the same. It has broken above this downtrend line, broken above 20 MA, and I think Garmin, as long as it stays above this downtrend line, it will most likely drift sideways and try to move up to meet the 50 MA and the 200 MA. But if Garmin drops below this low area here, right, there's a possibility that it might move down and continue to move back down to challenge the lows here. So there's some important points that we have to look out for in Garmin. I go to the weekly chart. As you can see, the smooth stochastic sell-off down to oversold level meets the 200 MA, and there's quite a lot of support here, weekly support. So from all this analysis, taking into account support, resistance, oversold level, I think most likely Garmin might not go back down. Okay, it probably has formed a long-term low around here. The lows of the candle you can see is 61.04. So those bought here, right, very smart. Okay, slightly Garmin will continue to drift and move back up. So you can see the odds of it moving up here because of the oversold situation. Now, having said that, Garmin has a history of making oversold levels and then going up a bit and then going back here down. Here also oversold, went up a bit and going back down. So like I say, if Garmin drops below the daily chart here, it might move back down and form a double bottom and move back up. So I take from the history of what happens to it in the past here. So most likely that might be what happens. But if on the daily chart it continues to stay above this downtrend line, stay above here, then you know that it's going to just trade sideways and then move back up. So if it drops back to around this area, you know there's a strong support here, maybe a good buying time if it makes a double bottom, especially if you draw a downtrend line. That'll be in the future, it goes down and then breaks back above the downtrend line, then that could be a good trade as well. Let's take a look at some of the Nasdaq stocks. American Airlines. Most airline stocks have been hit very hard because of a lot of cancellations and uncertainty caused by the coronavirus. So even with the government help, they are not allowed to have stock buybacks during the duration of when the government helps them. So for the entire duration, they are not allowed to have stock buybacks, and a combination of all these things make the airlines sector very weak compared to other areas. Stock had a sell-off, massive sell-off all the way from the gap down here, almost $17 it has lost. Perhaps it might break a downtrend line and move back up. Still hasn't broken above the downtrend line. Let's take a look at Adobe. Adobe, quite a lot of support here, which there's a support here in the previous low. You can see the support area here, which is why it bounced up and broken above downtrend line, though a bit weak compared to other stocks. But if it stays above this downtrend line, draw an uptrend line. If it stays above this uptrend line, most likely it will drift sideways and move back up. Autodesk, also a possible double bottom here, and we can draw a downtrend line. Now, as long as Autodesk stays above this downtrend line, most likely it will move up, trade sideways, move up, and as long as it stays above this uptrend line, most likely it will trade sideways and move back up. So a lot of these stocks, they are trying to bottom out here, and quite a lot of positive developments. You can even see that the stock met the 200 period weekly moving average, kind of very near trade to the 200 period moving average. The rising weekly 200 period shows that long term wise it's still in a uptrend. There's bullishness in the long term. So all the way, despite many sell-offs, the 200 week moving average is still trending up, which is why it continues to moves up. And this sell-off may be a buying opportunity, quite oversold. If you look at the analysis in the daily chart, so most likely it will drift sideways and continue to move up in the future. Applied Materials. Applied Materials is broken above downtrend line, something positive, and as long as it stays above this uptrend line, most likely it will just drift higher in the future. Quite oversold as well. Now AMD is a very interesting scenario. It is broken above this downtrend line, found support at the 200 moving average, and maybe some of you can see it. It has made a reverse head and shoulders. So what this tells us that it is bottoming, it has bottomed, and as long as it stays above this right shoulder here, you can see the reverse head and shoulder. So as long as AMD stays above this right shoulder here, it's gonna continue to drift and move up and even possibly make new highs. Weekly perspective, there's long-term support around here. So this video is getting a bit long, so I think I'll stop here, and if I have time I'll comment about other stocks and maybe also look at the different sectors like XLY, XBI, XLP, and so on and so forth. So I hope this look into some of these index ETFs and stocks help you out a bit. Before that, I would like to take you a look at the S&P 500. So I'm using TradingView. TradingView is a very good place for you to look at futures. And you can see that this is the S&P 500 index. It has broken above a downtrend line, like a cup and handle pattern. This pattern is broken above this handle here, and as long as SPX stays above this top here, and this, you can draw an uptrend line here. As long as it stays above the top here and the uptrend line, it's most likely gonna drift sideways and move higher. And let's go to the hourly chart. Hourly chart, it has done quite well after the presence of this ascending triangle here, and after rising here, there's some weaknesses, some correction here, but if it can stay above this area, then I think SPX will most likely trade sideways and then higher this week. But do be careful if it drops below this area. Right? It is trying to challenge a 60-minute uptrend line. Okay? So if it drops below here, this uptrend line, and also this area, there might be weaknesses. There might be some correction down probably to here. Okay? I don't have time to go into other Dow Jones and the Nasdaq Composite Index, because this video is getting a bit long, but hopefully I can do that in another video. And there you have it. Hopefully this helps you, and I'll see you in the next video.